Debt is invisible. It cannot be mined from the earth. It does not grow in fields. It does not glitter like gold, or roar like oil. And yet, entire civilizations stand upon it. Before debt, power required possession. Land, metal, livestock, grain. Wealth was physical. If you could not hold it, you did not own it. But debt changed the architecture of power. It allowed something radical. The future. To be spent in the present. A promise became currency. Ancient merchants borrowed to fund voyages. Kings borrowed to finance wars. Empires borrowed to expand their borders. Debt accelerated ambition. It made projects possible that no treasury alone could afford. Cathedrals, navies, road networks, industrial revolutions. But debt is never neutral. It amplifies. When growth is strong, debt multiplies prosperity. When growth slows, debt multiplies pain. Because debt is built on trust. And trust is fragile. Banks do not lend money. They create credit. Credit is confidence. Recorded as numbers. As long as people believe, the system expands. Factories hire. Homes are built. Markets rise. But when belief fractures, everything tightens. Lending stops. Liquidity vanishes. Fear spreads faster than capital. History has seen this before. The collapse of empires. Financial panics. Market crashes. Tulip mania. The Great Depression. The housing crisis. Different centuries. Same mechanism. Too much leverage. Too little caution. Debt connects everyone. Your mortgage. Student loans. Corporate bonds. National budgets. Every modern economy runs on borrowed time. Governments issue bonds to fund infrastructure. Companies borrow to scale operations. Individuals borrow to build a life sooner than savings allow. Debt compresses time. It brings tomorrow into today. But compression creates pressure. If income grows, debt feels manageable. If income shrinks, debt feels suffocating. This is why debt can build nations and break them. After wars, countries rebuilt through borrowing. After crises, stimulus packages revived economies. But reckless expansion creates bubbles. When assets inflate beyond reality, the correction is brutal. Debt is not evil. It is a tool. A lever. In small amounts, it lifts heavy structures. In excess, it snaps. Modern markets operate on leverage. Investors borrow to amplify gains. Institutions use derivatives to hedge risk. Complex systems interlock, each dependent on confidence. And confidence is psychological. One headline, one rumor, one shock. Enough to freeze lending. When credit contracts, even healthy businesses struggle. Because debt is oxygen to growth. Without it, the system slows. With too much, the system overheats. The balance is delicate. Sovereign debt shapes geopolitics. Nations that control capital flows influence global decisions. Interest rates move currencies. Policy decisions ripple across continents. Debt is power disguised as paperwork. Invisible promises binding the future to today. Used wisely, debt builds infrastructure, innovation, opportunity. Used recklessly, it builds fragility. Because at its core, debt is belief. A shared agreement that tomorrow will be better than today. And when that belief fades, systems tremble. Nations are not built only on land or armies. They are built on credit, on confidence, on the willingness to trust the future. Debt is not money. It is faith. Quantified. And faith, when scaled, can build the world or shake it.